Okay, so let's get right into it. We need to talk about MicroStrategy. You know, the company that's gone all in on Bitcoin. And they just had what might be one of their most brutal weeks in a long, long time. With prices dropping and all these rumors flying around, we're going to break down what's actually happening versus what people are just, well, speculating about.
And you know, this quote right here, it just absolutely nails the feeling in the air. The pressure from the market has been relentless, and the whole vibe around the company just soured big time. It's basically been a perfect storm of anxiety for anyone watching.
So, this is the million-dollar question, isn't it? As Bitcoin's price inches closer and closer to MicroStrategy's average cost, that old fear is bubbling back up. The fear of a massive, forced sell-off. But is there any truth to it? Is it based on reality? Well, that's exactly what we're here to find out.
All right, so what exactly went down that got everybody so worked up? It really all kicked off with the price action. That's what set the stage for this incredibly uncomfortable week.
The first real gut punch was Bitcoin dropping below $80,000 over the weekend. Now, that's the first time we've seen that since April of last year. And look, it's not just a number on a screen, that's a huge psychological wall to come crashing down.
And you can see the ripple effect it had on MicroStrategy stock, MSTR. I mean, their equity ended the week down around 8%. But inside that week was one particularly nasty day where it plunged over 10%. That's one of its worst single-day drops in months. Ouch.
And this is the number that's really fanning the flames. $76,000. That's MicroStrategy's average purchase price for all their Bitcoin. So as the market price gets closer to that number, it's like a switch flips in people's minds. It's a psychological trigger that just unleashes all the speculation and fear, even though, frankly, the real risk is not what most people think it is.
And you know what happens when there's that much fear, right? A story starts to take shape. When markets are down, people look for simple, easy-to-understand explanations. And let me tell you, the liquidation narrative, it's simple, and it's definitely emotionally charged. So here's the rumor in a nutshell. The idea is that MicroStrategy bought high, the price is now falling, and at some point, some mechanism, a margin call, a debt agreement, is going to force them to dump all their Bitcoin on the market, which would, of course, cause a huge crash. It kind of feels like it makes sense, right? Which is why it spreads like wildfire. But the truth is, it's a lot more complicated than that.
So let's go ahead and pull that myth apart. To really get why this idea of a forced sale isn't the real danger here, you have to look at how MicroStrategy actually set up all of its debt. The devil's in the details.
This is really where the rubber meets the road. On one side, you've got the market's fear, all this chatter about margin calls and a forced fire sale. But then, on the other side, you have the cold, hard facts of the company's financial structure. And trust me, it tells a very, very different story.
Okay, let's just lay out the facts nice and simple. First, they're convertible bonds. That's unsecured debt. Second, what that means is that the bondholders have no claim on the actual Bitcoin. And third, the company keeps a separate cash reserve specifically to pay its preferred dividends. They've built this thing to withstand a storm.
Look, if you take away only one thing from the structural side of this, let it be this. There is no automatic trigger that can force MicroStrategy to sell its Bitcoin. If the price drops below that $76,000 average, nothing automatically happens. No alarms go off. No switches flipped. Nobody can make them sell based on the price alone. Period.
But here's the twist. Just because the liquidation risk is a myth, that doesn't mean there isn't a real crisis brewing. See, the problem isn't about whether they'll stay afloat. It's about something way more slippery, but just as dangerous. It's about trust, and it's about optics.
And you can kind of see how that trust starts to wear thin. MSTR has been buying Bitcoin hand over fist all the way through a 40% price drop. But when the asset still doesn't find a bottom, despite all that buying, the market starts to ask questions. Not about their belief in Bitcoin, but about their execution and their timing. And then, to make things even more interesting, MicroStrategy announced that the dividend rate for its preferred instrument, the one that trades under the ticker STRCH, was going up to a pretty eye-watering 11.25%.
Now, you can look at this hike in two totally different ways. On the one hand, you could say, hey, the model is working exactly as it's supposed to. A higher yield is designed to pull in more money when the price is weak. But on the other hand, critics are looking at this and saying, whoa, that looks like a sign of stress. It looks like the cost of keeping this whole thing going is getting really, really high.
So, all of this just leads to the big question. What's next? The conversation is now shifting to the future and to the key moments that are really going to put MicroStrategy's whole model
and its management to the test.
Okay, circle this date on your calendar, February 5th. I mean, you couldn't have timed this upcoming earnings call any better if you tried. It's happening at a moment of peak stress for the company, which means management has no choice but to face these tough questions head-on.
Ultimately, it feels like MSTR is standing at a major fork in the road. Path number 1. If Bitcoin finds its footing and bounces back, then this whole week was just another stress test that they passed. But path number 2. If Bitcoin keeps falling, all that psychological damage and the bad optics just get worse and worse, making their strategy a much harder sell.
And that's really the bottom line here. This upcoming earnings call, it's about way more than just the numbers on a spreadsheet. It's basically a referendum on trust. The market, as we all know, trades on perception. So the real question is, can management say the right things to calm everyone down? Or is this crisis of optics going to keep overshadowing the structural reality of the company? Believe me, we will all be watching very, very closely.